Welcome to CEO Money. I'm Michael Yorba. Thanks for joining us. Richard Lazarow is my guest today. He's the CEO of StockAnalystGuru. Richard, welcome to the show.
Thanks, Michael. It's great to be here.
I'm glad you're here. All right. For the new audience, give us your background and tell us, what you do to really help people in the trading world.
Okay, great. My background is as a fundamental stock analyst. When I started off in the business after getting an MBA in the 90s, and was basically a fundamental analyst for many years without using the technicals and the charts as an additional resource. But after some period of time, I realized, there are traders out there that are just using the charts and don't know anything about the technicals, who are doing very well. And I realized there must be clues in the charts to help me time entries and exits in stocks, because just because you find out a stock about a stock at any point in time doesn't mean that that's the day to buy it or short it. So I wanted to be a little more tactical in my entries and exits and manage positions better. And really, if possible, I just wanted to be in a stock when it was going up and out of it when it was going down, obviously, and short stocks as they were falling from resistance, etc. So I studied the technicals for many, many years and tried to use that as an overlay to the fundamental. And after doing that and studying that for many, many years, over 5 years, Michael, I started to, when I was able to put together the fundamental and technical analyses, my results drastically improved. I'm talking about the timing was impeccable, and I was using the market to show me, when the market was in updraft, I was mostly long, looking for longs that were outperforming the market. And when the market was falling, like it was in 07 or 08, 09, using shorting into the fall, and it worked. It was impeccable. It was really great. It was really a great way to invest. And so that's what I'm bringing to people right now, is the fundamental and technical analysis, both. We give away the fundamental analysis on our website, StockAnalystGuru.com. There's a worksheet that I actually used as a stock analyst to manage money professionally, which helped me to look at all the usual, PEG ratios, PE, growth rates, etc., and earnings revisions. There's a lot of great training there for free, no credit card needed. But our secret sauce is really the technical analysis.
Okay. What type of technical analysis are you using?
It's really, it's not like your old school, like, Keltner channels are using some technical tool that everyone has, already is available to them through any kind of a stockcharts.com or whatever. It's really an analysis, a reading of the chart. The chart has a tremendous amount of information in it if you know what you're looking at. There's support. There's just the training of how to understand where support is, where resistance is, what the trend is, and then how to use that information to your advantage. I can't say how important that is, but if I had this information at the beginning of my career, like how I'm offering it to people, really, who are maybe just starting their career out or just looking to invest their own money, it would have been a huge benefit. Honestly, it's tremendous. And as a fundamental analyst or trained as one, if I were to pick between a fundamental or just the technical analysis and just use one or the other, the technical is always correct. The technical analysis is tremendously superior to the fundamental analysis, because with fundamental analysis, you can't tell me even Warren Buffett doesn't really know whether a stock should be 15 times earnings or 25 times earnings or whatever, because you're only comparing to other stocks out there.
Well, Richard, yeah. I speak your language, having traded since 1980 myself. And, I've been through all of it, whether it's price pattern analysis, your classic support resistance, candlesticks. I learned them before They even wrote the book. I did. I learned them from the Japanese, which is
wow.
They're actually Egyptian, but anyway, that's another story. So I speak your language. So what I'm getting from you is this, that you really have a proprietary way to use technical analysis that you can show people to improve their trading and their market timing, and you back it up with a thorough knowledge of the fundamentals that can be used to support or to just overlay on the technical analysis for your timing models. Am I reading you correctly?
That's correct. Yeah. And like anybody can buy. I mean, like you can look at momentum, I guess, and just say, okay, this stock's going up, let me buy that. But if it's stock 60 times earnings, you're kind of playing with lighter fluid a little bit. So if you're comfortable with that, then you can certainly buy that. But I'd like to know if a stock is fundamentally well priced, because when you buy something that's cheap, that's supposed to add support to a stock. And when you see, so that's what I'm trying to look for, is something that's well valued, as well as so that's fundamentals. And then when the chart also says that there's support in the stock in the stock technically, then when both of those say that there's support and the trend is in your favor, then it's much more safe to buy than when something is highly valued and it's trading off of 15 times sales, and one little hiccup and the thing is going to fall apart, and you really have no value to base your buy on. So yes, exactly. Putting the two together makes a tremendous amount of sense. And likewise, when something is very overvalued, it can get more overvalued. So if you're looking at shorting something or buying put options on something to bet that it's going to go down, you want to also use the chart. And if you can, there's a way to identify in the chart that if the stock is likely, to fall, and a way to protect if you're, once you have this knowledge, it really, you know very quickly whether you're right or wrong. So when you're wrong, you have minor losses because you get out quickly. This is what I teach. And when you're right, then you can ride that wave in either direction that you're betting. So it's a great methodology, Michael. It really is. In fact, we have rules written down that I've never seen anywhere else, and I don't think I've heard anywhere else, that will absolutely get you to, if you follow the rules, will prevent you from doing idiot moves that like we all are prone to do out there because we're human, that are worth their weight in gold. They really are. I mean, just you make your money back in one mistake. For most people out there who are investing, the training. I mean, if you're not trained and you're putting your money to work, it's like doing surgery on yourself when you're, when you watch the show about doctors on TV. It's just ludicrous.
Now, you have a daily coaching webinar?
I do. Yes, every day at the end of the close, we get on screen and talk about the support, resistance, and trend of the major averages or the exchanges for the day, each sector, and whether they're up in an uptrend or downtrend, and then we go through the stocks that the subscriber base is interested in, and they can pitch those or suggest those through the webinar. So what we try to do is we try to show, okay, the market is moving up here, so you want to be more levered, long on the long side. And then, okay, these sectors are also doing as well or better than the market. So these sectors you want to find stocks in these sectors because they're outperforming the market. And then the stocks in those sectors, you drill down. So it's very methodical. So there's a lot of sector rotation going on at any one time. So if you understand that maybe, okay, the home builders have peaked in January and then they started going down while the market was still going up, then just that knowledge alone, just that one piece of information, when someone points it out and you say, well, why are you doing that? Well, you say, well, because this has gone down for a few days, and so I feel like these stocks are cheaper. People will rationalize this and say, this has gone down for a little bit, so now I think it's cheap and it's going to go up. And you're like, no, that's in a downtrend. You want to be buying stocks that are acting as well as or better than the market, and selling stocks that are acting worse than the market and are showing preponderance for going down.
Do you talk about position sizing?
No, that's up to the each subscriber. There's no way. I mean, I mean, I mentioned something quickly about that in the training, but it's really, and I can on, if they ask me, I would say, you want to have a diversification, but you don't want to have too much diversification that you don't have, that it's too broad for you and that you can't really follow everything well. I mean, you want to know, you don't want to have 2 stocks or 3 stocks, but you don't want to have 25 stocks where you don't have enough information. And so, but in the middle there, I think like 10, 12, 14 stocks is probably a good diversification. If you don't want to sell your,
let me get in the conversation here. So that's what you're working with, is a portfolio of about 12 to 15 that you rotate through, market timing, buy them low, sell them high, and then it seems to me, if I'm getting this correctly, that you're following up with a risk strategy so that if it starts backing up on you, you're out quicker than riding it or doubling up on the pullback. Am I correct on that?
That's right. You never double up on a pullback. You don't buy. We don't espouse buying anything in a downtrend. And in fact, there's guys on TV that say that you buy a little, and then if it goes down, you buy some more, and if it goes down, you buy some more.
Yeah.
And I'm like, not so good. Yeah, that's for losers, because by definition, you're losing money there.
It only
on
works.
The third buy.
It only works when it's a confirmed bull trend and you know it's going to go up. Outside of that, you're just going to blow yourself up. Now, at the bottom of your website, it says guarantee. Could you bring that to light? Make sure the viewing audience understands what you mean by this guarantee on your website.
Yes, we have the technical training that we have is rock solid. I don't want to say perfect, but it is just about, it is as good as I could get it, and it really helps you identify the trend. It really shows you where support is, where resistance is, and how to figure that out. And it might take you a few tries to get there, but it is what we guarantee that this training is I think we put very good. It's I forget the wording. It's not impenetrable, but if you're wrong, you lose little bits because it gets you out very quickly. So if you try to get a buy and the stock goes against our rules, then it gets you get out maybe a few times with minor losses, but you never ride anything down where it could really do any damage. And eventually, if you try that a couple times and the stock doesn't go in your favor, eventually you're going to get to support. And then we teach you how to buy off of support. If support doesn't always hold, so if it doesn't hold there, then it's no longer support. But in terms of the guarantee, there's 100% money back guarantee in writing if you can show that the precepts that we teach do not work, or are not even, that don't get you most of an uptrend and get you out of most of a downtrend, which is what we all want. There's no way to get all of it. It's impossible.
Let's end on that note, because you've gone over everything that I could possibly ask you, and quite frankly, after doing trading since 1980, well over 30 years, I think I kind of got an idea of what the high points are, what people would want to know. It's been a pleasure having you on our show. Thanks for being here, Richard.
My pleasure.
You've been watching.
Michael, great to be here.
You're welcome. You've been watching CEO Money with Michael Yorba. Don't forget, like us on Facebook, follow us on Twitter, and subscribe to our YouTube channel. Thanks for watching.